If you have been hearing people say that T-bills are one of the safest investments in Kenya, but you have been wondering what they actually are, this video is for you. You may also have been wondering whether T-bills are better than a money market fund. In this video, I will explain everything you need to know about Treasury bills so that by the end, you will know exactly whether they are right for you. Welcome to Build Your Wealth Hub. If this is your first time, this is a platform where we talk about money. We break down investments such that everyone can be able to understand and implement them. We also offer personal and business finance coaching. So if that is something you are interested in, you can check out our website at buildyourwealth.co.ke and book yourself a session. If you're new here, consider subscribing so that you do not miss any content that will help you to build your wealth with confidence. If you're a returning subscriber, thank you so much for your support. We really value that, and I hope this video has a positive impact in your financial journey. So let's get back into the video. What are T-bills or Treasury bills? A T-bill is a short-term loan that you give to the government, yeah? So what happens is that instead of a government borrowing from the bank, they borrow from investors like you so that they can finance their operations, yeah? And in return, they pay you interest when that specific bill matures. Think of it this way. You lend your money to the government today, and after the maturity day, the government returns your money plus profit on top. Why do governments issue T-bills? Governments can issue treasury bills for so many reasons, such as when they need money to finance projects, to pay salaries, to manage short-term cash needs, or to refinance debts. So rather than the government borrowing only from banks, it allows the ordinary Kenyans to also invest through the T-bill in the government. So someone may ask, are treasury bills safe? And one of the biggest advantage is that treasury bills are backed by the government of Kenya. And what that means is that they are generally considered one of the lowest risk investments in Kenya. However, no investment is completely risk-free, so it is important to understand how they work before you decide to invest in them. At the moment, Kenya has 3 types of T-bills, and they are classified according to the period of maturity. The first one is 91-day T-bill, the next one is 182-day T-bill, and the third one is 364-day T-bill. It's basically 3 months, 6 months, and 1 year. How do T-bills make money? This is one of the most unique investments because unlike other investments where you get paid your interest at the end of the maturity period or at the end of a specific period, for T-bills, they are sold at a discount. And I'll give an example to explain how that happens. What happens with a T-bill is that you pay slightly less than the face value, and then after the maturity period, you get the full face value, which has profit on top with the amount that you had paid. For example, let's say the full face value of the bill is 100,000. So you pay 90,000 at, let's say, January, and then after the end of the period, whether it's 91 days, 182 days, or 364 days, the government pays you back 100,000, which is the full face value. So the difference, the 10,000, is the profit or the interest that you've earned from your T-bill. So this is a different type of investment because we are used to those that you invest 100,000 and then they go and accumulate maybe interest on the principal. But in this one, you pay a less amount than the full face value, and then you get paid full amount, and then the difference is your profit. I hope that makes sense, yeah? And the minimum investment for a T-bill is 100,000, and after that, investments are made in multiples of 50,000. Now, how do you invest in a T-bill? There are two common ways of how to invest in a T-bill, and the first one is directly through the CBK, Central Bank of Kenya, using an app called DAO CSD platform. So that one, you do it directly on your own through the Central Bank of Kenya. And the second method is indirect, where some MMFs and unit trusts invest their portfolio in some Treasury bills, giving their investors indirect entry or indirect exposure to the Treasury bills. Some of the advantages of investing in a T-bill include you have the government backup, it feels safe investing in the government. You have predictable returns, like I explained, you can put 90,000 and you know that in 3 months or 6 months or 1 year, you're getting back 100,000. So that is predictable, unlike other investments where they are more of uncertain with the returns. Another advantage is it is suitable for preserving your capital, and they have short investment periods, that is less than 1 year, and it is good for people who know when they will need the money. If you know that you will need the money in 1 year's time, it can work best for you and for your financial goals, such that you can buy a T-bill and by the end of 1 year, you get back your money and direct it where you wanted it to go. Some of the disadvantages include the high minimum investment. We must agree that as a common mwananchi, getting 100,000 is not easy to invest in a T-bill. Another one is that your money is tied up to maturity period, especially if you invest directly through the CBK using the DAO CSD platform. Another one is that returns can change depending on the market's interest rates, although that is a rare one. And another disadvantage is that T-bills may not always outperform other investments over the long term. So let's do something interesting. Let's compare T-bills to money market funds. This way, it will help someone who is watching and at least align their financial goals to one. If you may not afford both, you can, choose which one to direct your money to, because we are going to break them down into how they work. The first one, T-bills, they have fixed investment period. If you know that you are not going to need your money soon, T-bills can work for you. Another one is they have higher minimum investments. So definitely if you have 100,000 and above, T-bills is the option you can go for. But if you do not, maybe you can consider money market fund. Another characteristic is government security. Because you are loaning the government, you have that security that your money is guaranteed that you will be paid back, yeah? For money market fund, they have flexible withdrawals and they have lower minimum investment. There are some money market funds that you can even invest with as little as 100 shillings. So compared to 100,000, the minimum investment amount is much affordable. Also, money market funds have professionally managed portfolios, which is a good thing. So neither of them, T-bills and money market fund, is perfect for everyone. There's no one size fits it all. Instead, it depends with your financial goals, your liquidity needs, whether you need the money soon or later, and mostly the investment amount. That is what will determine the one that you will go for as an individual. So who should invest in T-bills? T-bills might be suitable if you have a minimum of 100,000 to invest, if you do not need immediate access of your money, if you prefer lower risked investments, and if you are saving for a goal which is within a year. Some of the common mistakes while investing in treasury bills that we need to avoid include investing your emergency funds. Like we said, this is money that you may not be able to access before the maturity, so do not invest your emergency fund in a treasury bill. Choosing an investment without understanding how it works. I hope that this video will help you to know how T-bills work before you choose to invest in it. Another mistake is ignoring maturity dates. The T-bill might be maturing much later than when you need the money for another, maybe school fees or another project. So you need to be aware of the maturity dates before you invest. And another mistake is focusing only on the returns and ignoring your financial goals. You need to choose T-bills if they are in line with your financial goals and not because of any high returns or something. So in conclusion, T-bills are one of the safest investments available in Kenya, but they are not the best choice for everyone. The best investments are the one that matches your timelines, your goals, and the amount that you need or you have to invest. If you found this video helpful, please subscribe to build your wealth so that you do not miss other videos that will help you to build your wealth with confidence and be financially free. Also, let me know in the comment section, have you tried to invest in a treasury bill or are you yet to start? I'd love to hear from you and I will see you in my next video. Bye.